If you pay contractors, freelancers, vendors, or process payments through a card or app, the rules for 1099 reporting just shifted under new legislation, the One Big Beautiful Bill Act. New thresholds, new deadlines to track, and a filing system that's about to disappear. Let's break it down so you're not scrambling in January. Which forms do you actually need? Step 1. Know your forms. First, figure out which 1099 forms apply to your business. Here are the big ones. Form 1099 NEC. This is for non-employee compensation. If you paid a contractor or freelancer, this is your form. The reporting threshold just jumped from $600 to $2,000 for payments made in 2026. Form 1099 Miscellaneous, or MISC, covers things like rent, prizes, awards, and medical payments. Most of these payment types also move to the new $2,000 threshold. But watch out, a few categories stay at their old thresholds. Royalties are still $10, and attorney gross proceeds and fish purchases are still $600. Form 1099K. This one's for payment card and third-party network transactions like Venmo, PayPal, or Square. The threshold here is $20,000 and more than 200 transactions. That's a restore back to the original number after a scheduled drop to $600 got reversed. Form 1099R for retirement plan and IRA distributions. Form 1099DA for digital asset sales. Starting this year, brokers must report cost basis, not just gross proceeds. Form 1099G for certain government payments, including a new box for family leave benefits. Form 1099S for real estate transactions, now including certain sales involving digital assets. Bottom line, match the form to the payment type and double-check the new thresholds before you decide who needs one. If you have workers who earn cash tips or overtime, pay attention. Forms 1099 NEC, 1099 Miscellaneous, and 1099K all added new boxes this year specifically for cash tips, a Treasury tipped occupation code, and overtime compensation. If your business hasn't been tracking this data separately, now's the time to start. Step 2. Filing methods. You've got two ways to file, paper or electronic. But here's the rule that trips people up. If you're filing 10 or more information returns in total across all types combined, you are required to e-file. That's not 10 per form type, it's 10 total. Miss this and filing on paper counts as a failure to file. Here's the part almost nobody's talking about. The IRS's old e-filing system, called FIRE, is retiring at the end of 2026. Starting with the 2027 filing season, IRS becomes the only system for e-filing 1099s. If you've been using FIRE, you need an IRS account and a transmitter control code, a TCC, set up before filing season hits. And that TCC application can take around 45 business days to process. Translation: don't wait until January to deal with this. Step 3. Mark your calendar. Deadlines depend on the form. 1099 NEC, IRS, and recipient copies are both due February 1st, 2027. No extension and no split between IRS and recipient deadlines. Most other forms like 1099 Miscellaneous, K, R, and G, recipient copies are generally due February 2nd, 2027, while the IRS copy is due March 31st, 2027 if you're e-filing. 1099-DA and 1099-S, recipient copies get a little more breathing room, due February 17th, 2027, with the same March 31st IRS deadline. A couple of 1099 miscellaneous boxes, substitute payments, and attorney gross proceeds have an earlier recipient deadline of February 15th, 2027. Write these down. Set reminders. Missing them is where the real cost comes in. Step 4. The cost of getting it wrong. Penalties are assessed per form, not per batch, and they scale with how late you are. File within 30 days of the deadline, $60 per form. File between 31 days late and August 1st, $130 per form. File after August 1st or don't file at all, $340 per form. If the IRS decides you knowingly ignored the requirement, that's intentional disregard. The penalty jumps to $680 per form, with no cap at all. And here's the part that catches people off guard. Failing to file with the IRS and failing to send the recipient their copy are two separate penalties. One late form can rack up charges on both sides. There is some relief available. If you have a clean compliance record, you may qualify for the IRS's first-time Abate policy. And if you know you're going to miss a deadline, filing Form 8809 gets you an automatic 30-day extension. It won't erase the requirement, but it can drop you into a lower penalty tier. New thresholds, new boxes, a system swap from FIRE to IRIS, and penalties that stack fast if you wait. The single best move you can make right now is to get your IRIS account and TCC sorted before the season starts. Confirm which forms your payments actually trigger and put every deadline on the calendar today, not in January.